Welcome to our journey into the world of entrepreneurship and small business finance. In today's fast-paced economy, starting your own business is both exciting and challenging. Entrepreneurs are the backbone of innovation, driving new ideas and creating opportunities. But as many soon discover, turning a vision into reality requires more than just passion. It demands a solid understanding of finance. In this video, we'll explore how entrepreneurs can navigate the financial landscape, secure funding, manage cash flow, and build sustainable businesses. Let's begin by understanding what entrepreneurship really means and why finance is its lifeblood. Small businesses are the heart of local economies, providing jobs and services that larger corporations often overlook. Typically, a small business is defined by its size, number of employees, and annual revenue. These businesses range from local coffee shop to tech startups. Understanding the unique challenges faced by small businesses is crucial for entrepreneurs. From limited resources to fierce competition, small business owners must be strategic in their operations and financial decisions. Let's dive deeper into what sets small businesses apart and why their financial needs are unique. Entrepreneurs possess a unique mindset characterized by creativity, resilience, and a willingness to take risks. This mindset is essential for navigating the uncertainties of starting and growing a business. Financial literacy is a key component, enabling entrepreneurs to make informed decisions and adapt to changing circumstances. Whether you're launching a new product or expanding your services, understanding how to manage finances is critical. In this scene, we'll explore the traits that define successful entrepreneurs and how these traits influence financial strategies. Finance is the foundation of every business. Without proper financial management, even the most innovative ideas can fail. Entrepreneurs must understand how to budget, forecast, and track expenses to ensure their business remains viable. Access to capital, managing cash flow, and planning for growth are all financial challenges that must be addressed. In this scene, we'll discuss why finance is crucial for entrepreneurs and how it impacts every aspect of business operation. Securing startup capital is often the first hurdle for entrepreneurs. There are various sources of funding, including personal savings, loans, angel investors, and venture capital. Each source has its own advantages and risks. Personal savings offer flexibility but may limit growth, while loans require repayment and constrain cash flow. Investors provide expertise and resources but may demand equity. Understanding these options helps entrepreneurs make informed decisions about how to fund their ventures. Bootstrapping is a popular approach among entrepreneurs who prefer to grow their business without external funding. This method relies on personal savings, revenue from sales, and careful expense management. Bootstrapping encourages discipline and creativity as entrepreneurs must maximize limited resources. While it can limit rapid growth, it also allows for greater control and independence. Let's explore how bootstrapping works and the strategies entrepreneurs use to succeed with minimal capital. Angel investors are individuals who provide capital to startups in exchange for equity or convertible debt. They often bring valuable experience and networks, helping entrepreneurs navigate early challenges. Angel investment can accelerate growth, but it also means sharing ownership and decision-making. Entrepreneurs must carefully evaluate potential investors and negotiate terms that align with their vision. In this scene, we'll break down the role of angel investors and how to attract them. Venture capital is a form of financing provided by firms or funds to startups with high growth potential. Unlike angel investors, venture capitalists typically invest larger amounts and expect significant returns. They often take an active role in guiding the business, providing mentorship and resources. However, venture capital comes with strings attached, including loss of control and pressure to scale quickly. Understanding the basics of venture capital helps entrepreneurs decide if this funding route is right for them. Crowdfunding has revolutionized how entrepreneurs raise money. Platforms like Kickstarter and Indiegogo allow businesses to pitch their ideas to a broad audience and receive small contributions from many supporters. Crowdfunding not only provides capital but also validates market demand. Successful campaigns require compelling storytelling, transparent goals, and active engagement with backers. Let's look at how crowdfunding works and the keys to launching a successful campaign. Small business loans are a traditional source of funding, offered by banks and financial institutions. These loans can help entrepreneurs cover startup costs, purchase equipment, or expand operations. However, securing a loan requires a strong business plan, good credit, and collateral. Entrepreneurs must understand the terms, interest rates, and repayment schedules before committing. In this scene, we'll discuss how to apply for small business loans and what lenders look for. Government grants offer non-repayable funding to support small businesses and entrepreneurs. These grants are often targeted at specific industries, innovation, or underserved communities. Applying for a grant requires thorough research, detailed proposals, and compliance with regulations. While grants can provide a financial boost, competition is fierce and the process can be lengthy. Let's explore how entrepreneurs can access government grants and maximize their chances of success. Solid business plan is essential for securing funding and guiding your business. It outlines your vision, target market, competitive analysis, and financial projections. Investors and lenders rely on business plans to assess risk and potential. Entrepreneurs must be thorough and realistic, demonstrating how their business will achieve profitability. In this scene, we'll break down the components of an effective business plan and how to use it as a roadmap for success. Financial forecasting is the process of estimating future revenue, expenses, and profitability. It helps entrepreneurs plan for growth, anticipate challenges, and make informed decisions. Accurate forecasting requires analyzing market trends, historical data, and business goals. Entrepreneurs should update forecasts regularly and use them to guide budgeting and investment. In this scene, we'll discuss the importance of financial forecasting and practical tips for getting it right. Cash flow management is critical for small business survival. Entrepreneurs must track incoming and outgoing funds, ensuring they have enough cash to cover expenses and invest in growth. Poor cash flow can lead to missed opportunities or even bankruptcy. Tools like cash flow statements and budgeting software help entrepreneurs stay organized. Let's explore strategies for managing cash flow and avoiding common pitfalls. Entrepreneurs must keep a close eye on expenses to maintain profitability. Tracking expenses involves recording every purchase, categorizing costs, and analyzing spending patterns. This process helps identify waste, optimize budgets, and prepare for tax season. Using accounting software or spreadsheets can simplify expense tracking. In this scene, we'll discuss best practices for monitoring expenses and staying financially healthy. Diversifying revenue streams is a smart strategy for entrepreneurs. Multiple sources of income reduce risk and increase stability. Revenue can come from product sales, services, subscriptions, or partnerships. Entrepreneurs should regularly evaluate their revenue streams and look for new opportunities. In this scene, we'll explore how to build and sustain diverse revenue streams for long-term success. Setting the right price is crucial for profitability and competitiveness. Entrepreneurs must consider costs, market demand, and value perception when pricing products or services. Pricing strategies include cost-plus, value-based, and competitive pricing. Testing and adjusting prices can help maximize revenue and attract customers. In this scene, we'll discuss different pricing strategies and how to choose the best approach for your business. Profitability analysis helps entrepreneurs understand if their business is making money. This involves calculating profit margins, analyzing costs, and identifying areas for improvement. Regular profitability analysis enables entrepreneurs to make strategic decisions and ensure long-term sustainability. In this scene, we'll explore how to conduct profitability analysis and use it to drive business growth. Financial statements provide a snapshot of a business's health. Key statements include the balance sheet, income statement, and cash flow statement. These documents help entrepreneurs track performance, identify trends, and make informed decisions. Understanding how to read and interpret financial statements is essential for managing a successful business. In this scene, we'll break down the main financial statements and their importance. Budgeting is a proactive way to manage resources and plan for growth. Entrepreneurs must set realistic budgets, monitor spending, and adjust as needed. A well-crafted budget helps prioritize investments, control costs, and achieve business goals. In this scene, we'll discuss budgeting techniques and how to use them to drive success. Tax planning is essential for minimizing liabilities and maximizing profits. Entrepreneurs must understand tax regulations, deductions, and filing requirements. Proper tax planning ensures compliance and reduces the risk of penalties. Working with a tax professional can help entrepreneurs navigate complex tax laws. In this scene, we'll cover the basics of tax planning and tips for staying ahead. Entrepreneurs face various risks, from market fluctuations to operational challenges. Risk management involves identifying, assessing, and mitigating these risks. Insurance, diversification, and contingency planning are common strategies. Effective risk management protects assets and ensures business continuity. In this scene, we'll discuss how entrepreneurs can manage risks and safeguard their venture. Financial technology, or fintech, offers powerful tools for entrepreneurs. From accounting software to payment platforms, fintech streamlines operations and improves efficiency. Entrepreneurs can automate invoicing, track expenses, and access real-time financial data. Choosing the right tools depends on business needs and budget. In this scene, we'll explore popular fintech solutions and how they benefit small businesses. Hiring employees is a major milestone for entrepreneurs. Payroll management involves calculating wages, withholding taxes, and ensuring compliance with labor laws. Entrepreneurs must balance payroll costs with business growth and profitability. Using payroll software can simplify the process and reduce errors. In this scene, we'll discuss best practices for hiring and managing payroll in small businesses. Inventory management is vital for businesses that sell products. Entrepreneurs must track inventory levels, forecast demand, and minimize waste. Efficient inventory management reduces costs and improves customer satisfaction. Tools like inventory software and barcoding systems help streamline operations. In this scene, we'll explore strategies for effective inventory management and its impact on profitability. Marketing is essential for attracting customers and growing your business. Entrepreneurs often face budget constraints, requiring creative and cost-effective strategies. Digital marketing, social media, and word of mouth are powerful tools. Measuring results and adjusting campaigns ensures maximum impact. In this scene, we'll discuss how to market your business effectively without breaking the bank. Networking opens doors to new opportunities, partnerships, and funding sources. Entrepreneurs should attend industry events, join business associations, and connect with mentors. Building a strong network provides support, advice, and access to resources. In this scene, we'll explore the importance of networking and practical tips for expanding your connections. Scaling a business involves expanding operations, increasing revenue, and entering new markets. Entrepreneurs must plan carefully, ensuring they have the resources and infrastructure to support growth. Financial planning, hiring, and technology upgrades are key factors. In this scene, we'll discuss strategies for scaling your business and overcoming common challenges. Every entrepreneur should have an exit strategy, whether it's selling the business, merging, or passing it on to family. Exit planning involves valuing the business, finding buyers, and negotiating terms. A well-planned exit ensures financial security and preserves your legacy. In this scene, we'll explore common exit strategies and how to prepare for them. Entrepreneurship and small business finance are deeply intertwined. From securing funding to managing cash flow, every decision impacts your business's success. By understanding financial principles and applying practical strategies, entrepreneurs can build resilient, profitable ventures. As you move forward, continue learning, adapt to changes, and seek support from your network. Remember, the journey is challenging but rewarding. Thank you for joining us, and best of luck on your entrepreneurial adventure.